The time is best when the price is low. Debt can be a two-way sword. We have to learn when the market falls down. Debt can help you grow your company with a faster pace. The top debt-free companies in India. Welcome back, traders and investors. Welcome back to the channel Stock Pro, and I'm your host, Dr. 𝐶𝐚𝐭𝐬𝐀𝐩𝐩 𝐒𝐮𝐩𝐻. And today I'm going to talk about debt-free companies. So again, the same scenario, market is falling down. Sit tight on the cash, right? जब market नीचे गिर रहा होता है, it's important for us to have cash in our accounts and not to get swayed by investment at that time. Wait for market to bottom out, let it stabilize. Market never bottoms, and never, like very rarely you will feel or you will see a V-shaped recovery. So market, when falls down, it goes up and down sometimes and then consolidates, goes horizontal for some time, and then it takes a turn. So market has just started falling down, almost like it's been 3 months. There could be another 6 months or so market may be falling down. So focus on your learning in this whole time. When the markets are falling down, it's not a bad time. Actually, it's a very good time for us to really learn, understand, absorb, do our research, and sit tight with cash and get ready to invest when the right opportunity emerges. So let's understand another aspect of whether we should invest in a debt-free company or not. So the question is, whether is it okay to invest in a should we always look for a debt-free company? So before I really share the presentation with you, why does company take debt? Why company takes loan? It's basically to move faster in their vision. Like suppose a company want to expand, they want to have many outlets. Let's say they have a, let's say I talk about Titan, for example, and they want to open many outlets. So if they want to open many outlets for company, they need more money. And suppose they don't have enough money, they would like to borrow it from the market or from the bank, and that is the debt. But if the company's vision is very strong, the management is good, it's okay to have debt. It's not bad. But in general, when a company takes, like for example, to pay company's loan, again company takes a loan. Like to repay one loan, company takes loan, again loan. That is a very bad debt, because that is a debt trap. Like for example, you talk about, there are companies like I know who have become almost negligible. For example, JP Associates or Jan Irrigation, or for example, I know of RCom, and there have been many such companies which have borrowed huge amount of money, and ultimately they have become, like bankrupt. I mean, they're heading towards bankruptcy. So let's talk about the pros and cons of debt-free companies. So when you examine a company's financial, different factors play different roles in determining its strength. In the debt section, there is a lot of information to consider. Zero debt on a balance sheet indicates that a company is debt-free. A company's present performance and future growth are strongly influenced by its debt. So again, I would like to speak this in Hindi कि जब आप किसी कंपनी को देखते हैं तो कंपनी के फाइनेंशियल में हर एक चीज का एक डिफरेंट मीनिंग होता है, और खासतौर से डेट सेक्शन जिसमें जहाँ पे लोन या उधार जहाँ उन्होंने कंपनी ने लिया हुआ है या अपने शेयर्स को प्लेज किया हुआ है, वो सेक्शन एक बहुत इंपॉर्टेंट इंफॉर्मेशन लेके आता है. जो कंपनी जीरो डेट के साथ आती है, जिनके बैलेंस शीट में जीरो डेट होता है, कंपनी के पास कोई डेट नहीं है, वो कंपनी की परफॉर्मेंस और उनकी फ्यूचर ग्रोथ एक स्ट्रॉन्ग इन्फ्लुएंस दिखाती है. उससे ये पता लगता है कि कंपनी के पास ग्रोथ करने का बहुत बड़ा स्कोप है. देखो, अगर कंपनी ने डेट लिया हुआ है तो जाहिर है कि उनको अपने डेट पे एक इंटरेस्ट देना पड़ेगा. अगर कंपनी की एक्स कॉस्ट आती है, सपोज कंपनी अपना जो प्रॉफिट बना रही है एक्स बना रही है, अगर डेट लेने के बाद एक्स प्लस इंटरेस्ट जो उनको पे करना है उतना नहीं जनरेट करेगी, तो कंपनी एक डेट ट्रैप में आ जाएगी. मतलब कंपनी को का डेट बढ़ता चला जाएगा. और कंपनी अपने, जैसे कि आरकॉम के साथ हुआ है, आरकॉम के पास 60,000 करोड़ का डेट था. हर महीने उसकी इंटरेस्ट रेट इतना ज्यादा था कि वो बढ़ते 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 1 लाख करोड़ तक पहुंच गया। तो ये डेट ट्रैप हो जाता है। तो आपको यही देखना है कि जो कंपनी का प्रॉफिट है वो इंटरेस्ट रेट से कहीं ज्यादा होना चाहिए। नाउ व्हाट डज इट मीन टू बी डेट फ्री? Asset depreciation won't be a problem for debt-free companies, and the asset turnover will be higher for those companies. As a result, business growth can be accelerated as they provide sustainable competitive advantages. It is important to note, however, that not all investments are guaranteed to succeed. The pros and cons of the investing in debt-free companies should be taken into account before indulging in such an endeavor with a high-risk profile. Investment lessons can be learned in a few ways. Debt kills in many ways, and that is perhaps the most important point. Generally, companies whose finances are sourced from third parties, less than 50%, are more likely to fail. So always remember, debt can be a two-way sword. Debt can help you grow your company with a faster pace. At the same time, debt can put you into a trap. Both are possible. So let's go further and understand the top debt-free companies in India. The first one is TCS, then Infosys, Mindtree, Divi's Laboratory, Gland Pharma, Lawson and Toubro, Hind Unilever, IRCTC, Bharat Electronics, SBI Life Insurance. All of them are large caps. None of them is a small cap. There are small cap companies also which are debt-free. So TCS is basically part of the Tata's group. TCS is the second largest Indian IT company by its market capitalization and is among the most valuable IT service brands worldwide. Company is almost debt-free. Company has good return on equity, track record of 3 years at about 40%, and company has been maintaining a healthy dividend payout of 56%. Similarly, Infosys, again, provides consulting, technology, outsourcing. In fact, TCS, Infosys, and Mindtree, these are three companies which are into IT sector. And they are all providing good CAGR and good ROE. Then we have Divi's Laboratory, which is a pharma company. Company has reduced debt. Company is almost debt-free. Company has expected a good quarters. CAGR is about 22.8% and dividend payout is about 28.2%. Then we have Gland Pharma, another pharma company. And what you can see here is that the company's CAGR is about 24%. The important point to note here is though the company is reporting repeated profit, but it's not paying out dividend. So that means probably the company is just investing back into the company to make it better in some way. Then Larsen and Toubro Infotech. That's the biggest, Larsen and Toubro Infotech, which is LTI, is again an IT company, offers an extensive range of IT services like application development, maintenance, and outsourcing enterprise. Company is almost debt-free and company has given ROE is about 29% and healthy dividend payout of about 36%. Then Hindustan Unilever, which has about 44 brands across 14 distinct categories. Hindustan Unilever is in the FMCG business. Company is almost debt-free. Company has given ROE is about 28% and dividend payout is about 96%. Then Indian Railway IRCTC, it's one of the monopoly company. Is a mini Ratna, which is category 1 central public sector enterprise under the Ministry of Railways. IRCTC was incorporated in 1999. Company is almost debt-free. Company is expected to give good quarters. Company has delivered good profit of 24% CAGR, and they are giving very, very healthy dividend payout of about 41.3%. Then Bharat Electronics, BEL. This was established in 1954. Company is almost debt-free. Company is expected to give good quarters and companies maintaining a healthy dividend payout, which is about 43%. And then SBI Life Insurance. I always like my personal choice is always in insurance companies. If you go to a city, if you go to even New Delhi, Connaught Place, the biggest building that you will see in Connaught Place is of life insurance LIC building. Why is it so? Because most of us do take insurances, and most of the time those insurances lapse with zero value. So that means, where does this money go? This money goes into the LIC's account, right? Of course, there are sometimes they have to give the declare, like some people do claim their policies also. There is so that is why I always like life insurance companies, and companies almost debt free, tax rate seems low, earnings include other income, and dividend payout is 10%, and promoter holding has decreased. So these are some points about the company. Now I have presented you top 10 debt free companies in India. What I wanted to discuss now is, what are the pros and cons of investing in the debt free companies? In the minds of many investors, a debt free company should be a fundamentally strong one. It may not always be the case. But if you take a look at the list of debt free companies and analyze their financials through thoroughly, you will have a better idea of whether investing in its stock is feasible or not. So, see, what I suggest you, that you should have the list of all the top debt free companies. Once you have that, you know what their reserves are, what their debts are, what is their cash from the operating activity are. Once you have all the fundamentals in place, then the price comes into play. What's the price telling you, right? According to me, price is the most important factor, even way beyond the their balance sheets, because price may tell you that company is about to be turning around, right? So keep a close track on the price. Now, as we are correcting right now, markets are correcting. There is an anticipation of, long recession coming up, or inflation is peaking up, interest rates are increasing. So all of it is pointing towards there could be a recession, there could be a slump in the stock prices. So we will sit tight on our cash and find out. We'll do this research where we have all the debt-free companies, we have all the strong, fundamentally strong companies in a list, and we'll put them together and watch their price. And whenever we see a consolidation happening at the lower levels, and that is when we start investing in them. So now I'm going to also discuss, before I close this video with you people, what are the pros and cons of investing in a debt-free company. So the pros are basically, debt-free companies are less likely to go bankrupt since they have strong financials. जो डेट फ्री कंपनीज होती हैं वो bankrupt नहीं हो सकती हैं क्योंकि उनके financial strong होते हैं. Then there is, since there is no debt, there is no interest payment required. That means their profit is completely their profit. There is no interest to be paid out of it. These companies are better equipped to handle economic slowdowns since their fixed outgo is higher, cost of financing lower. Since their fixed outgo is higher, cost of financing is lower, right? Such companies tend to book a higher profit margin, and since interest cost is a fixed cost, debt-free companies tend to have a lower break-even point. So, like, company which is having debt will always have a higher break-even point. Means break-even point is when your input and output becomes equal. Like whatever money you have invested in a company and what profit you generate from the company, when is this going to become equal? That's the break-even point. So break-even point in debt-free companies is going to be very low. That means at a lower cost only you will be able to make better profits. But there are some negatives also about it. If a company seeks financing via equity, they should have lower earning per share ratio. So what it says, if a company seeks financing via equity, they should have a lower EPS ratio. That's a con. And then companies opting for equity financing over debt pay higher taxes. So this is a second point, is an important point, that companies opting for equity financing over debt pay higher taxes. So the companies which are making more profits will have to pay more taxes for sure. In case you have some debt, some part of debt is exempted from the taxes. So that is how you pay lesser taxes, and you can show EMI as your output. So your taxes will reduce from there. Companies with zero debt tend to have higher cost of financing. So these are some small cons, but if the management is strong, is smart, they can reduce on all these aspects. So debt-free companies I have discussed with you. I'll just quickly again show you what are the 10 debt-free companies that I have listed. And TCS, Infosys, Mindtree, Divis Laboratory, Gland Pharma, Larsen LTI, Hindu Unilever, IRCTC, Bharat Electronics, SBI Life Insurance. And in case you want to learn more about them, you can do this from a website called screener.in, and you can type each company and find out what is the companies like Hindu Unilever, right? If I have a look at Hindu Unilever and come to the balance sheet, just see here the reserves are 48,000 crores and borrowings are just 1,043 crores. Negligible, extremely negligible. And even you can go to the screens and find out here what are the debt-free companies, and also you can find out which companies are reducing debt. So you will be able to see from here on screener.in, these are the companies which are reducing their debt on a regular basis. So there are various ways for you to get prepared about investing in the stock market. The whole idea is to keep learning, right? So one question I want to ask you people, and you can answer me in the comment box, right? Let me take up an example of Nifty. This is Nifty, right? Now my question to you people is, and I would like you people to answer it sincerely. This is Nifty's chart, right? I'm just taking from for the last 2 years. This is for the last 2 years. Where would you like, let me convert this into a weekly chart. Now question to you people is, where would you like to invest? Would you like to invest here? One. Would you like to invest here? Would you like to invest here? Or would you like to invest here? I'm sure a lot of us are interested to invest at these points because we see people buying. No one is interested in investing here. There's no one interested in investing over here. So we have to learn when the market falls down. We have to learn to invest at the value which is appropriate value, which is the intrinsic value, which is the most reasonable value. When the market will fall down, get ready with good companies, with zero debt, with good dividend payout, and price is very reasonable. It's not overpriced. Those are the better investment any day. So when the market falls down, like go back and see what happened in 2008. Here, see here, this is where we had a good opportunity to enter in the market. This was a really good time for us to enter in the market, and see here, market do fall but never came back to the same point, right? Never, market fell but never came down. So always remember, when the price is high, everybody want to buy. When price is low, no one is interested. But trust me, the time is best when the price is low. So get ready, update your knowledge, update your understanding, and keep learning, keep earning with Stock Pro. And a lot more is coming up as far as educating you in the stock market is concerned. And all the best. Take care. See you in the next video.